Novo Nordisk was once the darling of both investors and pharmaceutical innovators. With its blockbuster diabetes and obesity drugs like Ozempic and Wegovy, the company saw massive growth in both revenue and market cap. Investors poured into the stock, believing in the unstoppable global trend of obesity treatment demand, and for a while they were right. The Danish pharmaceutical giant became a trillion-dollar company, rivaling tech giants and even surpassing the GDP of its own home country. But then something changed. The first signs of trouble didn't come from sales, those were still strong, but from the market's expectations. In finance, it's not enough to be great. You have to beat the impossible expectations baked into your price. Novo Nordisk had become so expensive that even record-breaking results started to feel not good enough. The stock was priced for perfection, and in that kind of situation, even a small crack can bring an avalanche. Then came competition. Eli Lilly entered the scene aggressively with Mounjaro and Zepbound, pushing into obesity treatment with similar or even better efficacy in some studies. Suddenly, Novo Nordisk wasn't the only sheriff in town. While their first-mover advantage helped them dominate early, the playing field was leveling fast. Meanwhile, production bottlenecks began to show. Novo Nordisk's drugs were in such high demand that shortages became frequent. This might seem like a good problem, too much demand, but it actually caps revenue growth and frustrates both doctors and patients. If you can't meet demand, your stock gets punished, not praised. Further adding pressure was political scrutiny. As Novo's obesity drugs became household names, governments started questioning the pricing. In the US especially, both parties have raised concerns about pharma profits. The EU is also looking at price caps and reimbursement reforms. Novo Nordisk became a poster child for the public debate around healthcare costs. All of this had a sharp impact on the stock price. After reaching all-time highs in early 2024, Novo Nordisk shares started slipping. At first, it was gradual, a 10% drop here, a missed forecast there. But by mid-2025, the stock was in freefall. From highs around 135s, it dropped to under 80s, a staggering 40% plus drawdown, wiping out hundreds of billions in valuation. Retail sentiment flipped hard. Momentum traders bailed. Index funds started rebalancing. Even long-term holders began questioning if the golden era was over. On social media, once bullish influencers deleted their old videos. Analysts slashed their price targets. The narrative shifted almost overnight, from unstoppable growth titan to overhyped and vulnerable. But where others see decline, contrarian investors see opportunity. Novo Nordisk still holds incredible intellectual property. Their drug pipeline includes new GLP-1 derivatives, insulin innovations, and even potential Alzheimer's-related treatments. The company's R&AMP. D-spending is among the highest in the sector. They're also expanding manufacturing aggressively, with billions invested in scaling production in Denmark, the US, and Ireland. Let's talk about the stock itself. At $80, Novo Nordisk trades at a far more reasonable valuation. Its P/E ratio, which once exceeded 45, has come down to around 27. While still above average, this reflects both its strong cash flow and unique market position. The dividend yield, previously negligible, is now approaching 2%, making it more appealing to income-focused investors. Could the stock go lower? Of course. If pricing pressure intensifies, or if Eli Lilly wins more market share, further downside is possible. But long-term? The demand for effective obesity and diabetes treatments isn't going away. Novo's moat is deep, even if not as wide as before. They have strong brand recognition, years of patient trust, and partnerships with healthcare providers worldwide. It's also worth noting the broader macro environment. With aging populations in Europe, North America, and Asia, chronic disease treatments are not a luxury, they're a necessity. The healthcare sector remains one of the most resilient across economic cycles, and Novo Nordisk is a central pillar of that industry. Another angle, Novo is adapting. They've begun investing in digital health platforms, AI-driven diagnostics, and personalized medicine. While still early, these initiatives could diversify revenue streams and offset dependency on GLP-1 drugs alone. So where does that leave us? If you're a momentum trader, Novo might be a no-go for now. The trend is broken. But if you're a long-term investor looking for blue-chip exposure to one of the biggest healthcare megatrends of our time, this drop could be the entry point you've been waiting for. Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." Right now, Novo Nordisk is in the fear zone. Will they reclaim 135? It's possible, but don't expect it overnight. Recovery will take time, execution, and patience. But if they pull it off, we could be looking at a stock that not only rebounds, but evolves into something stronger. And remember, the market always overshoots, both on the way up and the way down. The question is whether you want to bet on a rebound or wait for even more fear. That choice is yours.